Hi, my name is Scott Gibson with Beneath the Surface. I'm here with Lawrence Roulston of Resource Opportunities. Lawrence, thanks for being with us.
Great to be here, Scott.
Now, you've been publishing for a number of years, since the 90s, editor and writer, commenting on gold stocks, and wanted to get your take right now on what your thoughts are on the investors and the investor sentiment and their attitude towards gold stocks, and particularly junior mining stocks right now.
Well, it's really anomalous, and all the time that I've been in the business, I've never seen it so anomalous. You know, you're starting with the gold companies. You know, the gold price was up last year. It's up considerably from where it was a year and a half ago, and yet the gold equities are down across the board. The seniors, the intermediates, the juniors, they're all down in spite of a rising gold price. Now, the base metal prices are down, and of course the base metal equities are down even more, but that's really another story, and I think we're still in this, you know, fleeing from risk sort of phase where retail investors and institutional investors are terrified about the risk and what might happen in Europe and what might happen in the United States, and maybe the slowdown in China, etc. So there's still a lot of fear out there. But, you know, to put this in a perspective, as much as investors have fled the mining sector and the equity prices are down, the mining industry itself is still very, very optimistic, very positive. Last year was a near record in terms of merger and acquisition activity in the mining sector. There were $149 billion of M&A activity last year in the sector. Canada being the biggest part of it, you know, more than a quarter of it, you know, in Canada. But this certainly tells us that the mining industry sees the long-term value. And what's really interesting, you know, if we just look at the copper and the gold companies within that M&A activity, the average premium paid over the market price was 46%. So it just shows how far out of line the valuations are in the junior sector.
Well, the precipitous decline of the stocks since last March, that it's really, last year for most retail investors was a bad year, but the massive amount of takeovers that are happening, showing that the value's there, and this trend should continue for the long term.
Absolutely, the values are there. The mining industry needs to continue to buy deposits to, you know, replace production and to expand production. You know, demand for metals continues to increase. So the fundamentals have never been better. The valuations have never looked more attractive. It's just a matter of investors overcoming that fear of, you know, what might happen in the bigger economy.
Well, and that's where we're seeing, you know, the investors are afraid, and what are they doing? A lot of them are selling, and this is going against the basic maximum of buy low and sell high. They're doing the opposite. What should they be doing right now? What should be the sectors, the areas, or the things they should be looking at?
Well, buying, but very, very, very selectively. You know, there's a couple of thousand companies in the Canadian junior mining sector, and a lot of those companies are struggling to raise money. You know, they will raise money. I mean, any company with a heartbeat, management has a heartbeat, can raise money, but it's a matter of what price will they do it at, and is there ever hope for a gain from those kind of financing levels. But the higher quality companies that have meaningful deposits, you know, with a tangible value, and a good management team that's advancing those projects toward production, toward the point where there will be a takeover, those kind of companies should be aggressively accumulated at this point in the market, at these kind of valuations.
So tell me a few of the companies that you do like in the space right now.
Well, there's actually a lot of companies that I think are really, really undervalued. And just to throw out a few examples, there's Lion One that has almost 750,000 ounce gold deposit in Fiji. Enormous exploration potential. And to me, it's sort of an ideal situation of having a resource in hand, a tangible asset with a near-term path to production, but also still having large-term exploration potential. So that's one. And another one, Midlands Minerals in Ghana. Two really interesting exploration projects. One of them is a past-producing gold mine in Ghana. They've got over 500,000 ounces right now. They've got a clear path to 1 million ounces, at which point they intend to go back into production. That one is trading at about 4 cents a share right now.
Right, and they had a management change recently, a strong group coming in.
Really strong management group now. A new president, new VP exploration. Just the fact that they brought in people of that caliber, you know, says a lot about the merits of the projects. Going out a little earlier stage exploration, Sierra Madre Gold, another really cheap stock, trading at a few pennies a share. Two really good exploration projects in Mexico, a gold and a silver one. Calibre had some very, very interesting drill results a few weeks ago that really propelled the share price. They're back drilling. They're clearly on the path of a major new porphyry gold-copper discovery. And that project is going to add a lot of value. They already have other projects with resources in hand. So there's a few examples of companies that I think are offering really good value at current pricing.
And just in terms of disclosure, I do own most of those companies. I own Lion One, I own Midlands, and I do own Candente and Calibre. How about yourself?
I own shares in all of those as well, yes. I own shares in a very large number of companies and try to spread it out, not get concentrated in one company. But yes, I do own all of the ones I mentioned.
Well, thanks very much, Lawrence, for being here with us.
Thank you.
Again, that's Lawrence Roulston with Resource Opportunities. My name is Scott Gibson with Beneath the Surface. Thanks for being with us.